broadcasting. Should be up on YouTube. It's 4:10. All right, I'm going to get started. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, no shorts. Added a position in Labu today. Where is there it is. All right. Oh boy, some of these stocks here after hours, huh? Upstart, on the Upstart numbers here that Pat posted are phenomenal. And they announced a buyback. I'm assuming it's the first buyback. I didn't even realize that they were really a profitable company yet at this point. I thought that they were still a full-on growth company. What did I read? Oh, I know it's a legitimate company. I just thought that they were still in their growth phase. You know, kind of a competitor to SoFi there, but they just demolished their numbers. Let me scroll up here in the VTF. Fourth quarter adjusted EPS 89 cents versus an estimate of 50 cents. That's a huge beat. You see first quarter revenue, 295 million to 305 million with an estimate of 358 million. It's fantastic guidance. Announce a $400 million share buyback. That is also sweet. You see the fiscal year 2022 sales at 1.4 billion versus an estimate of 1.2 billion. Absolute monster. And then one of my favorite companies, Airbnb, been a bull on this one since the IPO. Oh man, this thing had a great trading setup coming into today. Traded really well intraday too. And then this earnings report's the icing on the cake. Airbnb up 15% here after hours. Also looks like they're posting some really solid numbers. They see their Q1 sales at 1.41 billion to 1.48 billion. That's well ahead of the estimate of 1.24 billion. Big fan of Airbnb. I've been saying it since they IPO'd. I always feel like any company that you use as a verb is a company that you want to be long, right? You Google stuff. You don't Bing stuff. You Airbnb a house. No one says you really VRBO a house, right? That's like the big Airbnb competitor. Absolutely love Airbnb. But then Roblox here, not so good. Looks like they missed on their users. Roblox down 8% here. Getting hit a little bit. Not too terrible. $60 is some support in Roblox. Looks like 59.50 is the after hour low. So they're trying to hold that one in a little bit. 1 second. Okay, let's hop into our actual meeting here. So big update here for the market. Spies are up 1.4%. Qs are up 2.3%, and the IWM is up 2.5%. So really big update. A lot of that occurred with the gap. Let's go to our chart here, the Spies. You can see just a really big gap up. And we spoke about headline-driven markets yesterday in the afternoon meeting. Headline-driven markets are really difficult, and today was really just a continuation of that. Pre-market, I think really early in the morning, I think even before pre-market trading starts, which is 4 a.m. Eastern, Russia came out with some news that they were withdrawing some of their troops from the Ukrainian border. The market really seemed to like that. So what we saw was the market had a big uptick, and we saw oil downtick nicely. Gold's down a little bit today. I mean, Gold gap down on that news, but it's still well above the 80 EMA, so that's fine. We saw oil have a big downtick on that as well. USO here is closing down 3.3%. XLE was our relatively weak sector today. XLE down 1.3%, but you can see here based on the daily chart, XLE actually recovered really well off of its lows. I've been saying it from the beginning. I really think that I really think that the Russia thing is more noise than anything else. I still really think that our big picture story that we need to be paying attention to is inflation, is interest rates, is this dynamic of value versus growth. I think at this point everyone knows my opinion on this. I want to be long these value names, these energy type stocks, which are leaders. And I am. I got positions in Apache, I got positions in Oxy. But I also don't necessarily think that growth stocks are doomed to return to historic multiples. I think that a lot of that correction is behind us as they pull back 75, 80, 85% for some of them, depending on what you're looking at. And a lot of those things have actually turned around really nicely. Be interesting to see if like a Robinhood can give us another higher low, if a DKNG can really break out. DKNG was on the radar for $24, but still hasn't cleared out. So overall, we'll see how this market plays out. But just for the moment anyway, we're dealing with all these Russia headlines, which have definitely been a little bit of a headache. We retraced a good percentage of Friday's down move. If we look at the price action here, you can see that those Russia headlines really started to bang up the market on Friday at like 1:15 to 1:30 Eastern. So that would be kind of a full negation of that move if the Spies are able to get back above 447. So the news today brought us up to 446, $1 away from totally negating kind of that initial move. So we'll see if the market can kind of reclaim that. I still think if we're looking at a big picture here for our market, negating the negative Maribozu from Friday is really important for the bulls to do that. And for the moment, I think that the bears are still in small time frame control. Friday bears took control. We have this negative Maribozu. This is a pretty damning candle here. We lost a support area. 440 was also important, which we more or less held. We traded beneath that yesterday, but closed more or less on it with this little retracement tail coming in. So we got our retracement mainly via common gap this morning back to the 80 MA. And it was a second day in a row here this morning from a game planning perspective where my thought process was less is more on today's trading session. Because technically we still are having this negative Maribozu right in front of us. So if the Spies can reclaim 450, then I'll probably start getting a lot more bullish again. But while we're beneath that, you kind of have to say smaller time frame here that bears are in control. But what made it tricky was that it's all kind of news based right now. So this morning we had a common gap higher, and someone even in the VTF, I don't remember who, was asking me about today's gap. Because technically it is a common gap, and common gaps tend to get filled. There's a higher probability that when you're looking at a common gap, that it is going to get filled, right? So just going to the 5-minute chart of the Spies here, you can see here's the gap. This is yesterday, this is today. And we spent basically the entire day digesting the gap, which, by the way, is tricky price action, which is exactly what I thought we were going to get. Kind of tricky price action this morning. So you had to be a little bit selective with what you were trading. And there were a few good trades out there. We could take a look at some of the things that I was involved in, you guys were involved in a little bit. So technically this is a common gap. Common gaps have a higher probability of getting filled, but that's not quite as true when there's news that's causing it, right? And again, this is a headline-driven market. So we had this common gap higher based on the fact that Russia's withdrawing troops, and that negates some of Friday's sell-off. So it kind of just puts the market back to where it's, air quotes, supposed to be, based on the new updates on the Russia information. And then, like I said, we spent the entire day just digesting this gap. So if you're trying to trade the Spies specifically, this price action is not good. if you're like a pure day trader who only, like, let's say you're a pure futures trader who only trades the E-minis, this is why I like being a stock trader, actually. Because on days like today when the S&P is in a really difficult spot and it's going sideways all day, I can still find usually a few stocks that are out there to try to make a living off of. And that was kind of the game plan today. Let's see if there's any difference in the Qs of the IWM. Yeah, Q's a little more relatively strong here during the day and closed really well. Daily chart of the Qs, similar situation. We still need the Qs to negate the negative Maribozu from Friday for that to start looking more bullish. And smaller time frame, I would still say bears are in control. IWM, though, is looking fantastic. The Russell, which led us down, has been relatively strong here for the last month or so, since its bottom here. For all the month of February, it's been relatively strong to the Spies and the Qs. It's been holding in really well. You have like this triangle, ascending triangle pattern here, which technically is like a neutral to bearish pattern. You know what? Let me just say it's a bearish pattern. Technically, this would be a bearish pattern, this triangle here, because it's a trend continuation pattern. But the internals of an ascending triangle are bullish. So there is a chance that this could break to the upside, and it's kind of testing that resistance now with those higher lows. So if this symmetrical triangle breaks up, we could be looking at a move here in the IWM somewhere back into this range that it was in the month of December, basically, and very early January before we had the next level, before we had our big January sell-off. So we'll see if we can get some further continuation in the IWM, because that is looking absolutely solid. And again, from an actual trading perspective today, the game plan was less is more. And if you followed that game plan, it was the right move. I traded some Labu today. That was a new position that I got involved in. I think Felipe and Big Z and a couple people on the team were calling out this great strength here off the open, was able to get involved. Luckily, it never broke the opening low. This pullback was a little bit deeper than we would like. But it held in pretty well, and then that one ended up closing on highs also along with the market. So I kept a little bit of the Labu position that I'm in. So that was pretty solid. We spoke about some of these oil names here a little bit. We kind of called out this pivot low here at 10 a.m. in XLE, and XLE did recover decently well. Apache was a focus of mine. And did Apache close green today? Yeah, Apache closed green today. That's pretty impressive. This name is more volatile than I thought it was going to be when I first got into it on a day-to-day percentage movement kind of basis. So that's Apache. Some of you guys also were focused on Oxy. We had a call out here off of this low in Oxy. This was like 20 cents risk on it. Closed okay. Definitely would like to close above 40 on this thing. But if you're in from 39, you have a decent profit cushion for a potential swing. And again, I know that energy was really weak today, but this isn't this. We're not in energy on the Russia story, right? We're in energy on a bigger picture supply and demand story with energy, plus a lot of these companies being value stocks and interest rates moving higher. That's helping the relative strength here with these energy stocks. So I'm still really sticking with Oxy and Apache. I'm in both of them for the time being. Apache's been the one that I've been trading a lot more actively than Oxy, and that worked out pretty decently also. And then there was some other stuff. Micron. Micron's been a focus in the morning meeting the last couple of days in a row. I mentioned I don't love AMD or NVIDIA right now. I think NVIDIA has earnings after the close tomorrow. Otherwise, I actually would have liked this setup. The inside and up to as a way to negate the negative Maribozu here for AMD. But I'd rather stay out of AMD and NVIDIA until they get through their earnings. The NVIDIA had a fire day today. Micron is one that I've been bringing up in the morning meeting the last couple of days. It's been one of the more relatively strong semiconductor stocks. I really like this pattern here. Yesterday, I know we tried to be involved in it, but it was a little bit too early. The ADMA hadn't quite caught up. This morning, the ADMA had caught up. It was showing relative strength. It blasted off. And I know some of you guys were able to be involved in this one early on this break of this flag or whatever, and caught a fantastic move in Micron. So that's awesome. And I'm sure I'm missing one or two names that I wasn't involved in. I did lose some money, and I did something silly with the CO today. Actually, you know what? I don't think I did anything too silly with it, to be honest. I was probably just a little bit heavier than I should have been. I just got caught up in one of these pump and dump type situations. It's not the first time I've been caught in one. It's not the last time. You know, I'm always hoping that when you have and hoping is a 4-letter word in trading, but I'm always hoping that with these low float type stocks, when they've got significant news that comes out, that's usually the type of stock that you'll see have 100%, 200%, 300% intraday move, and then close well, and then, you know, keeps going another 40% after hours. I know we've all seen that. I always tend to just not being the one that does it whenever I try to get involved in these things. But, you know, stock got halted. Normally, this is not a name that I would ever want to trade. It doesn't do any volume at all. So you almost can't even really swing it, especially if it closes like this. You know, but they came out and they said that someone who was using their product was basically cured of HIV, and the stock closed negative on the day, which is really impressive. Company cures HIV and closes down 4% on the trading session. But, you know, I thought that headline was interesting for obvious reasons. Low float stock. So when they unhalted this thing, I scooped up some stock at about $5, thinking maybe this is one of those ones that, you know, they fly to the moon, and this thing just totally failed. I stopped out of the vast majority of my position when you tried to pivot off the ADMA, and then when that pivot broke here, that's when I got stopped out of the vast majority of my position. I got pretty gross slippage on it too. So I took a nice little loss on a stupid type of name that I probably shouldn't have been involved in, and I can definitely just about promise that if I were to look at these types of plays over the course of my career, I'm definitely net negative in them. Like these, you know, low flow, no volume type stocks that get hit with this kind of news, and it's a company that I've never heard of, and I get involved in it. Usually I end up losing money, and today was no exception. Luckily, I was on a phone call, and I couldn't communicate into the VTF that I was buying it, so it doesn't really look like too many people lost money in it. Also, I know at least one of you guys tried to sneak into it too. I mean, you see a headline, you know, certain headlines like you cure cancer, you cure AIDS, like you would think that a stock would be able to perform well on that, but I guess not. So you took a little bit of a hit on that, but the flip side was, you know, this MGI, which I don't need to go over again. The news was out pre-market. The news was out pre-market. We discussed it pre-market in the morning meeting today. It was a lot of my focus pre-market as well, trying to figure out what the game plan was on this. Once again, a shout out to Stefan on having us be involved in this MGI for quite a while. You know, catching this recent move here from $5 all the way to them now announcing this buyout price of $11. I guess there's a 30-day, what are they called, go shop period or whatever, where they can, you know, shop around that offer. And I do think that there's a real chance that they get interest from another company at a price that's higher than 11. So I did take off about a quarter of my position into this 20% up move on the buyout information, just to take a little bit off the table. But I'm gonna hold the other 3/4 of the position until, at least my plan is to hold the other 3/4 of the position until closer to the go shop period ending, to see if we can get a little bidding war going on, which would definitely be nice. And that pretty much, I think, covers today's trading session. So again, you know, shout out to Stefan and shout out to the team, because he's providing the information, and it still requires all the traders to execute it. And I know, I haven't actually looked at the numbers, but I know a whole bunch of us are in this one. So awesome, awesome, awesome stuff. And that's all I got. So I'm happy to take a look at whatever questions you guys got. Excuse me. Let me scroll up here in the VTF. First thing I am seeing is from Sebastian. Hey Derrick, how much attention do you pay to the shape or location of an inside candle? For example, Airbnb had one, but its bottom and maybe doesn't look as good as the one in NVCR as an example. So I don't pay a ton. Let me look at NVCR. Oh, this was nice too. I don't pay a ton of attention, honestly, to the location and shape of the inside candle. An inside candle is a rest day, and what you should see on that rest day is low volume. Like just looking at Airbnb here, you can see Airbnb yesterday on its inside day had very low volume. And that's exactly what you'd expect. And Airbnb, I actually really loved this trade setup coming into today's session. I just didn't get involved because I didn't want to take the earnings risk. So I will pay attention to it. You know, if the inside day closes on lows, or the inside day closes with a high upside candle, then there's a lower probability that's going to break up. But really, you should only be getting involved in this if it actually breaks up. And, you know, like I say all the time, if the trade never triggers, you don't lose any money, right? There's no harm, no foul in that situation. So even if something has a not so great looking internals on the inside candle, if it was still strong enough to break up, well, there's your strength that you're looking for after the rest period for continuation. So no, I don't pay a ton of attention to the shape of the inside candle. Again, I know that certain shapes might mean that there's a lower probability that it breaks up, but I don't really care if it doesn't break, right? So so that would be the thought process on that. From Chinggis, it looks like the averages on the SPY daily are all converging. Is that significant? So I gotta rebuild my charts here a little bit because I got messed up when I first got out here and I only had 2 screens. So I don't have a screen built out right now that shows my 20, 50, and 200 SMAs, which is what I like to see. So I on big picture charts, I like to look at a 20, 50, and 200 SMA, and I also like to look at my 8 and 21 EMA. And if you've got those simple moving averages, and they're all crisscrossing and colliding and in different directions, that is a signal of more of a trendless market, or at a minimum, a market that doesn't have time frame continuity of trend. And a market that doesn't have time frame continuity of trend, well, it means you have one less layer of probability on your longs or your shorts, right? If you have if every time frame is trending higher, if you have a 20 simple moving average that's sloping up, which is above a 50 simple moving average that's sloping up, which is above a 200 simple moving average that's sloping up, then you're going to have a higher probability on longs. If you have a 200 that's sloping down, and beneath that is a 50 that's sloping down, and beneath that is a 20 that's sloping down, you're going to have a higher probability, broadly speaking, on taking shorts. But if you've got flat-lined moving averages, crisscrossing moving averages, again, that signifies more of a trendless market, so trendless, and that means that you're, going to have, you just don't have that layer of probability on your side. So you got to go for other things, or also you could focus more on range trades, right? If I have an uptrending market, I don't really like putting shorts on off resistance very much. Maybe I will if it gets very extended to the upside and there's high volume upside capitulation or something like that. But for the most part, I don't want to short off resistance. I want to buy the breakout if it's trending higher. I want to be with the trend. As a general rule, being with the trend is easier money than being against the trend. But in a range-bound market, if we're coming into a range-bound market, which we easily could, it would make plenty of sense to me, and there's historical precedent for it as well, for this type of year to not actually be a massive breakdown year that some people are fearing, but also not really give us, what did we get the last 2 years in a row? 20, 30% upside for the S&P? That's an anomaly. So it very easily could be that we're looking at a year here, and I know it's only February, but it very easily could be in 2022 here that we're looking at a year that's more similar to 2015. That we're looking at a year where the market ends up somewhere between down 10% on the year and up 10% on the year. And if we have a trend-less range-bound market environment, that's actually when certain types of strategies like buying off of support and shorting off of resistance start to make a lot more sense than if you're in a trending market where you want to be looking for those trend and momentum continuation type trades. So good question there, Chinggis. Rowan saying that hope is a quintessential form of human delusion that you shouldn't indulge in. I entirely agree with you. I got to keep myself out of those cheap, cruddy pump and dump type stocks. I had a big old money day today, really good upside day for me today, and I decided, hey, let me take a few $1,000 and just throw it in the garbage on something like that. And I should not do that. I'm too experienced of a trader to make that kind of mistake. But I did, and I probably will again at some point in the future. From Paul, as I grow as a trader and look to put on more size and risk, would recommend waiting till the market picks a direction and volatility drops off a bit, or just be selective on days to size up the current market. Sure. So when you're thinking about sizing up to me has more to do with the dollar risk that you're taking per trade as opposed to the tier size that you're taking. And a lot of times that will happen in conjunction with each other. If you're taking more dollar risk on trades, it's going to tend to be that you're taking more tier size, but not necessarily. When you're in a very volatile market like we're in today, I think we talked about this in the afternoon meeting yesterday, in market environments that are characterized by higher volatility, as a general rule, you want to be taking less tier size and giving more space risk for the same dollar amounts of your risk. So, Paul, if you're performing well, you want to potentially start to think about sizing up the average dollar size risk that you're taking on your trades, and that will also potentially have game planning benefits as well. And the other thing I would recommend when it comes to, if you're performing well, when you're performing well, that's when you want to size up. But to do it slowly. Don't go from risking $100 a trade to risking $1,000 a trade. Build up. And again, I just always use simple numbers here because everyone has different account sizes and different types of accounts that they're involved in. And you have to do what's appropriate for you and your background and where you're at. But I'm a big believer in a slow build-up. This is not the way that I recommend doing it, but I'll tell you what I did when I was a newer trader. And again, it's not really the way I recommend doing it, but it can give you a thought process on building rules for sizing up when you're doing well. When I was a brand new trader at T3, my rule was I was going to increase my maximum tier size that I would allow myself to take by 200 shares after each profitable week that I had. And what ended up happening was I was doing well, and I was getting too big a little bit too fast, and I kind of had to taper that down a little bit. And again, the reason why I don't agree with that approach, even though it's what I did personally and it kind of worked out for me, is because it shouldn't be based on tier size. It should be based on dollar risk. So what I did was I added 200 shares every week I was profitable. Maybe you want to think about adding X amount of dollars of average risk onto your average trade for each week that you're profitable as a trader, and that way you're building up over time appropriately. So great stuff, Paul. Great stuff. Next from Terry Jones, if you could give your insight on Micron, was wait for the gap fill before I took a position. Next thing you know, it was gone. Sure. So part of that probably has to do with the fact that the market itself didn't fill its gap, which I spoke about already on why that kind of happened. It was a news-based type gap. So you've got Micron here, which is relatively strong to the market, has a beautiful daily chart. You have the market itself giving a gap up that doesn't get filled. So if you're looking at a stock that's relatively strong to the market and the market itself is not going to fill its gap, then that stock's probably not going to fill its gap either. And one of the signals that I really like to pay attention to then see that there's a lower probability of a gap fill is the moving averages catching up on the small time frames, the 8 and 21 EMA. So everybody here in the VTF probably remembers when I was speaking into the virtual Trading for Radio this morning. Sure, am I happy about this initial uptick in the market because I'm long? Sure, I'm happy about it. And especially the IWM was absolutely beasting here off the open. Qs also gave a little uptick. But I can't trust this opening uptick. I can't trust this opening uptick. It's still a common gap. Common gaps have a higher probability of getting filled. And when a common gap does not get filled, a lot of the times there will first be a price or time correction to the small time frame equilibrium. Initially starting with the 5-minute chart, and then post 10:15, 10:30, the 15-minute chart as well. And that's exactly what happened here. So when we were long, stock and whatever, and did the Qs break the opening low here by a couple pennies? Let me see. 352.22. They did by 3 cents. This is actually a new low in the Qs. So I hope no one got shaken out on that because the ADMA didn't catch up. And what about the Spies? Did Spies make a new low there? 443.45. No, looks like they actually held it. And I know that the IWM held it as well, but this pullback was a little bit deeper than I wanted. It was a 15-minute correction, but again, 15-minute correction makes sense at 10:20. So anyway, one of the things I'm paying attention to when we have a common gap up that has a higher probability of getting filled, that can be a signal that it's not going to get filled, is that the market can give me a time or price correction to that lower band of equilibrium, to that upper band of equilibrium, or to that equilibrium zone, and then it holds. So this opening low here for the Spies was not very important to me right away. The opening low for the Qs, not very important to me. These opening lows only are going to become important when and if the ADMA on my 5-minute chart and then my 15-minute chart is actually able to catch up to that low. Then all of a sudden I'll say, okay, this market's looking a lot more bullish. It's looking like there's a lower probability that the market's going to fill its gap. And that's what the IWM was able to do much quicker this morning, because the IWM just ripped here right off the open. This ADMA actually caught up to lows very quickly. And I was constantly commenting to the team here in the VTF in real time about these 3 indices. I'm like, all right, Qs are looking great. I mean, not Qs. IWM is looking great. IWM, that low of the day, absolutely is a must hold once this ADMA caught up. And I remember I tried to create this, I call this a false pivot. This is a great example of a false pivot. This type of candle here, this hammer type candle, is exactly the trend continuation type of pivot that we want to see. But if the ADMA has not caught up to that low yet, there is a higher probability of it being a false pivot where it breaks lower, and then we get a deeper true pivot closer to the equilibrium area or into the equilibrium area that actually holds up. And this, by the way, is why, for the people who know my trailing rules for reward maximization, why I have the second rule. The second rule dictates that I will not raise my trailing stop to a pivot low until the ADMA catches up to that price. And that's to help avoid these false pivots. So if anybody, for whatever reason, was long the IWM right off the open, you're not raising your stop to this pivot. You're not getting shaken out here. You're raising your stop eventually to this pivot. When the new high comes in, you're capturing the entire move. That's exactly why that rule exists. So I know you're asking me about Micron, but again, what happened with Micron today has to do with what the market did, and it also has to do with another one of our layers of probability, which is the relative strength layer of probability. Micron is relatively strong to the market, and it's relatively strong to the other semiconductors. And that's why I mentioned in the morning meeting today that Micron is my favorite semi right now. I love this setup that's coming in right now. Ideally, we wanted it to go yesterday. It needed a little bit more time, and today it just was strong early and just absolutely ripped. So going back to your small time frame chart, if you wanted to be involved in Micron, and there's reasons for that, off the open, you got to be patient. I see no reason at all to be executing Micron to the long side off this first 5-minute bar, even though you like the daily chart. But then look, it starts to go sideways. What do we call this? We call this a bullish consolidation, like very similar to a bull flag. And when do bullish consolidations tend to break? When the ADMA catches up to the base. So first, at 9:45, the ADMA caught up to lows. That now makes the low of the day here very significant. And another thing to like, this opening volume was pretty good, but then, volume was a little bit weaker, but it's in a consolidation, and volume is supposed to get slower, basically when you're building out like a flag type pattern here. ADMA further catches up basically to this base, almost at 9:55 a.m., and that's where you get your breakout. So I really think that the buy in this thing would have been right around here at $92 on the break of this consolidation pattern when the ADMA caught up. And maybe you had a game plan for yourself. Hey, I want to be long Micron, but I want to watch how it contends with its gap. Maybe it fills some of its gap. Maybe it totally fills its gap, and that's my opportunity to get in. That's fine, but you got to be flexible. That goes back to when Jay Cool was asking his question in the afternoon meeting yesterday, and we kind of did our dissection of all we know in the morning meeting is the daily charts, right? We don't know what the 5-minute chart looks like at 10 a.m. or when it's 9 a.m., right? Obviously not, because we don't have a crystal ball. But what we know is we really like this daily chart, we really like the relative strength, etc. And then we can start to look at the smaller time frame to be able to find that 15-minute execution based on the things that we like on the bigger time frame. So I hope that helps, Terry, and it was a very good question. From Steve, I couldn't find any trades today, so I noticed Tesla was trading in a range of 913 to 920. I would buy in the 913 to 915 area and short at the 918.50 to 920 area. I took profits earlier than 1-to-1 and moved my stop to my cost since the market was choppy. Again, if we're coming into a range-bound market, like I was saying already on this meeting, that makes me like the idea of range-type trades more. And what you're describing is a range trade, right? Buying off support, shorting at resistance. The thing I would caution you about, and I think that you kind of consistently have this problem, is that I don't think you're paying enough attention to your daily charts. I personally don't really care very much about intraday support and resistance. And I know that the market and Tesla ended up just really being kind of range bound here for most of the afternoon, and you can work that range back and forth. I think that that's difficult trading. I don't think that's necessarily going to breed you consistent profitability just doing that on a 5-minute chart in the long run. And I definitely don't like selling stock earlier than 1-to-1, and I definitely don't like raising your stop to your cost. As a matter of fact, that's one of the things I really dislike that a lot of traders do. And you hear it all the time. You know, you can follow people on YouTube or whatever, and they talk all the time about, you know, once I'm in the position, it starts to go in my favor, I raise my stop to my entry price. The reason why I don't like that is because the entry price is significant only to you. I want my stop losses to be significant to the market. I don't want my stop losses to be significant to me. Because if I'm making decisions based on my subjective feelings, my subjective price, my subjective thought process, that is not listening to the message of the market. And it's listening to the message of the market that is actually what's going to pay you in the long run. So again, I got no problem with range trades, no problem with support and resistance type trades. Would just caution a little bit against doing it based off like these very small time frame support and resistances, and I am not a fan of people raising their stops and their entry price for the reason I just explained. Okay, cool. Doesn't look like there's any more questions. 450 here. What do we got going on? Is Upstart still rippity ripping? Upstart up 38%. Absolute monster. Airbnb up 10.8% right now. All right, well, looks like I covered it. You know, again, pretty much a kind of a boring day for the indices. Still a little bit of a headline market environment, but we were able to really pick our spots. I think we did a great job kind of capturing the intraday low on a lot of the energy stocks. Much of us were swinging MGI, so that's fantastic. Micron was a beautiful trade. So, you know, great job here for the team. Everybody just keep focusing on your learning. And that's it. I'll see everybody tomorrow.